I don't think we were terribly surprised. I think, we would continue to forecast a very resilient market, primarily driven by earnings. We did recognize that a lot of that earnings power was still going to be very concentrated, but obviously the composition of the index would suggest that concentrated earnings could continue to suggest concentrated positioning. And we've continued to see sort of waves in which we have this kind of broadening out story play out. But this is still very much sort of a sorting hat, if you will, of AI related, and which part of the AI value stack is going to kind of run up.
And Paul, Jordan's, here's what we got. Here's the view forward. Yet again. We're very again.
I'm all in on that. Jordan, your title is Global Market Strategist. How do you guys think about U.S. versus non-U.S. these days?
Well, we're getting cautiously a bit more optimistic around Europe, particularly given now that the U.S. and Iran conflict is beginning to wane or soften, I should say. Now, again, that's still on very much shaky ground, but they're very much at the kind of the core in terms of one of the economies that were most hit. I would also say that we still see some optimism around Japan as well. Corporate governance, inflation, growth finally. And then I would say for emerging markets, you've got to be very active because that is still very much an AI-related sort of play there, particularly given that EM Asia and the big drivers of profit growth and performance. EM Asia is roughly almost 80% of the emerging market universe. So I think you've got to be very, very selective there. But I think we're still in this backdrop where we could see global markets kind of tread with the S&P, maybe even continue to outperform this year.
The Fed, the market is overpricing hikes. What do you guys mean about that?
Well, it's interesting. We put together a bit of a model that tracks a Fed speech as well as historical dissents over the last couple of meetings. And so you can kind of come up with sort of a barometer of a hawked-up score. Now, the committee, of course, is made up of 19 members that submit dots and submit projections, but there's 12 voting members. And when you actually look at the 7 governors, the New York Fed president, and the other rotating bank presidents, the bulk of those, we estimate about 8 to 12 of those, are in the hold to cut camp. Now, obviously, with Warsh being that 12th dot, he didn't submit projections, but I think it's reasonable to expect that he's on that hold or slightly cut camp as well. So you've got that core of the voting committee, I think, still tilting very much kind of dovish to on hold.
We got a million calls. I mean, my head is spinning interview to interview. Of where, do you have confidence? I mean, I know Feroli's been doing this for a while, and the others, but do we have confidence does JPMorgan have a confidence in their belief, or are you just guessing it, waiting for the next data point?
Well, I think we all are sort of waiting for the next data point, and I think we all need to be humble in our projections. But we weigh probabilistic outcomes, and so as the data is coming in, where do those risks skew? And I think if the data continues to deliver as it has been, which has been an economy that is resilient, a labor market that is resilient. Then I think that this, positions an inflation that can continue to come down. Importantly, I think the broad consensus that we're past peak inflation, this should allow give the Fed a little bit of breathing room to keep rates on hold. And I would say just one other comment there. I don't want to say that Warsh has boxed himself in, but do you really want to be adjusting policy rates at a time where you've got all these committees working in the background, maybe changing up the game in terms of what the Fed looks like and how the Fed communicates, while you're also adjusting policy as well? I think that introduces another layer of volatility to rate markets that wouldn't be welcome.
When you were at University of Virginia, were you on a task force?
I was in a secret society, so unfortunately I can't
what's
tell
the difference? That's brilliant. That's absolutely
so I
brilliant.
guess sort of, yeah.
I mean, Paul, help me here. In all of our experience, anytime you see the phrase task force, somebody explained the other day, nothing gets done.
Exactly, task force.
I mean, task force.
I don't know. Hey, we had super strong earnings in the first quarter, and one could argue that's really been driving this market here. How are you guys thinking about the second quarter?
More of the same.
Okay.
And so we're expecting, markets that are anticipating about 22% earnings per share growth. Margins continue to move higher, potentially reaching all-time peaks. Obviously, a lot of that's being driven by tech and tech-related. So again, they continue to support the margin story. I think what we're looking for is evidence that kind of AI and broader AI adoption is finding its way into improving margins for the 493 or the other parts of the market. I think that will really provide us with a lot more confidence that we're seeing some of the productivity gains that everyone is talking about AI delivering ultimately.